Okay, welcome everybody to this evening's AUDJPY Securities webinar. So we're a little bit late. So tonight's webinar is Forex Trading Live Market Analysis. Just to give you a heads up what's coming from me this week. Tomorrow evening at 7 p.m. we're going through part one of Smart Money Concepts, where we're discussing market liquidity and how you can identify that on charts and trade it. And then more analysis from me on Thursday at 7 p.m. Sydney time. If you want to join me, just register your interest at the webinar page. Okay, for everybody in the webinar, if you could read through the disclaimer, that would be great. For those on our YouTube live stream, I can't see the chat, but you can join us in the webinar. I'm giving you the link there to join us if you want to join us, so you can talk to us. For those in the webinar, you can use the chat box or the Q&A box to talk to me. So I'll just give you a moment to read through the disclaimer. All right, let's move along now. If you don't know me, then my name's Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at AUDJPY Securities. And I'm a full-time Forex trader. I've been trading now almost 20 years in the Forex market, mentoring for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. Through the week, you can connect with me at our website, acy.com. Go to the Market News tab, or at our YouTube channel at AUDJPY Securities Australia. And if you want to connect with me personally and get my links, then just head over to my Linktree page and you can catch me there. MD, good evening to you. All right, for those that have been waiting, sorry for the delay. We had some issues with our Zoom account. Didn't want to operate, so we've resolved that. And we are, of course, now working. If you want to get access to my MT4 webinar charts that I'm using, just contact nathan.bray. His email is on screen. And for those in the webinar, I'll put his details in the chat. There we go. All right, so let's first of all get into the news items for the week. Now, this week, we have a lot of items coming out that's going to affect the market, primarily today and tomorrow from the US. So really tonight, I'm just going to be looking at levels that I want to be trading around after the news events of today and tomorrow. I'm not going to be doing anything before then because I really don't know how the market's going to react when we have the inflation data coming out today and tomorrow for the US. So at 10:30 p.m. my time, Queensland, New South Wales time, we've got the US core PPI month-on-month, PPI month-on-month, expecting 0.2%, 0.2%. And that's obviously an inflation figure that the market's looking towards. So if it comes in very lower, much lower, that will be US dollar negative. If it comes in higher, that'll be US dollar positive. Getting into tomorrow on the noon for New Zealand, we've got the cash rates, RBNZ statement, not expecting any change, but they were rather dovish last time. So if they're again very much dovish, then we will probably see the New Zealand crosses go down. Tomorrow afternoon for the UK pound, we have their CPI inflation data year on year. Maybe expecting that to uptick a little bit. We'll have to wait and see how it comes in. 10:30 p.m. tomorrow evening, more inflation data, core CPI month-on-month, CPI month-on-month, and CPI year on year. Not expecting too much change there. So now if we get any upticks in these figures, that's not going to be complementary to the US cutting interest rates, which the market's kind of expecting in September. Thursday, 11:30 in the morning for Aussie employment change and employment rates. 4 p.m. in the afternoon for the pound, we then have GDP month-on-month. Expecting that to come in pretty much zero. US, 10:30 p.m. Thursday, we have core retail sales, and unemployment claims. So again, it could be volatile there from the US. into Friday, 9:30 in the morning for the Aussie RBA Governor Bollock speaks. Again, 4 p.m. in the afternoon, Friday for the pound UK retail sales. Okay, so lots of items coming out. Quite a few there for the pound, 3 for the pound. Interest rates for New Zealand and inflation figures is going to be the big topic for the week from the US. Okay, so be very aware, don't have the fear of missing out and thinking you're going to be in before the events. Wait for the events to come out and then see what you can construct as a trade after that. So I'm going to talk about levels I'm going to be watching post these events. Is price going to shoot up or shoot down? Is it going to continue with the trend, or will it rally back up maybe to offer an opportunity to sell back in line with the trend, something like that? So let's get into the charts now. Not much is changing on the dollar index. I've been discussing this range. This is actually a monthly swing low to monthly swing high. This is my day chart, but if you go to the monthly chart, you'll find those areas. And we've been getting support at 79% down here, having 1, 2, 3, 4, 5, 6 days of a bounce here. Just getting above the 62 level. And I've been discussing maybe we could come up to fill this imbalance over the short term now. Trend is still down on the daily. Lower bottom, this is a lower top at the moment, but if we do come up and take this top out this week, that's going to significantly change the structure there back to up on the daily, and that could see us come back up this range here, especially if the data's a lot more US dollar positive. Once we've hit that 79% level on that day, we've been nowhere near it since. So a couple of things that could happen this week. Of course, if we just shoot straight up, it's going to be difficult to get in. But we could come back down to test this level. This level could still hold and then come back up. So that's well worth watching. What price does the dollar index come down to here? And then does this relate to a level on a US dollar pair? Or a pair to the US dollar, the euro dollar. This 79% here on the dollar index inversely is almost the 79% retracement level on the euro dollar. So it's worth understanding, if we were to come down here, where would we be on another pair? Would we be at a clear level to trade at? All right. Okay, so let's get into the S&P 500. Now, of the range I've been monitoring, this larger range is actually the monthly range, monthly chart, low to high here. Came into 62 to 79% area, came up. So swings have been, I should put in a higher bottom, came up to, I think, there, down, up. All right, so we kind of have a bit of a turnaround here. We need to now negotiate this area here, approximately the 53.90 level. You most definitely could fail there to then further decline. So the news items coming out today and tomorrow are definitely going to affect the indices. And, really I would be looking at, I think on the upside here, it is 53.89.64. What happens at this level? Does it break or hold? And that's going to give you a general direction to start to look for trade setups. Okay. Looks like we've got definite support down here at the moment. So that could be long-term support now for a move up to retest the high. Lots of people have been saying, oh, this is like the final top and we're going to get a massive, severe, like GFT decline, but I don't know if that's really the case. It kind of looks like we've got support here. And this could just be a higher bottom on the monthly chart to continually move up. All right, let's get into euro dollar. Let's just move to the day chart. So I was saying about the 79% level on the dollar index, if we were to revisit that level. In reverse, the 79% level up here for the euro dollar. It got actually fractionally short, just fractionally above 110 before failing last week. So at the moment, it's very small ranges. Maybe, let me just see the range of yesterday. It's not doing much more than, it's not even doing 30 pips a day. All right. So might do more than 30 pips today, I'm sure, when the data comes out. But this high here was false broken at 109.48. So it's well worth watching what happens at 109.48 today. Does that level hold? And I've been saying last week that I actually got short up here last week at just above 110. That this imbalance here from the job figures data, start of the month, may well need to be filled, this imbalance. So I'm anticipating that we could come into this area this week if the data allows. But just from levels today, support is at 109.16 from the day chart, at 109.48. The ranges have been exceedingly small. So these are the two primary levels the market's focused on. If we get really aggressive, watch up here at 109.98 to 110 as a level to sell down from. It's going to be difficult in the euro dollar because it's just range bound. So, and there's not a lot of room between 109.16 and 109.48 in itself. So it is difficult to come up with levels, but there was the levels that the market's respecting at the moment. And if we have overshot up here, then we maybe don't want to get too much above 109.48 on any upward move. So that's worth watching there at the moment, okay, as the data comes out later in the evening. And we've already had a sell-off down already, so the market may be preempting some US dollar strength. But of course, we can't just go back up here and sell now because the price isn't there. So you're just going to have to maybe wait until the data comes out to see what's going on. Euro yen. Right, it's worth noting on all the yen pairs, I'm just going to say it once rather than repeat myself on every yen pair, they almost all look exactly like this pair. They're all still in a monthly uptrend and they've all retraced the 79% level or fractionally below. So the question is on these yen pairs, as a whole group, is this monthly trend going to remain? Has this been corrective whilst it's been aggressive to then come all the way back up? Or are we going to get some kind of rally up here now to put in the lower top at some point over the next month to continue a long-term, maybe downward move over many, many months? All right, I don't know yet. At the moment, if I have to use a chart and it's telling me that we're maybe putting in the bottom at the 79% levels. And yes, we could come all the way back up to trade to the highs again, unless something changes. All right, so the monthly trend there is up. However, all the other time frames are down. Weekly's now down. Broke this weekly low. This one here is the last one we broke below, so that's at 162.26, and we've been fractionally short. So that could be resistance. We're just having a week up. Most pairs are in week up at the moment. Is we might just have 1 week up and then have the next 4 weeks down. So it doesn't mean to say we're going to have 4 weeks up. We've just had 1, 2, 3, 4, 5 weeks to the low, 1 week up. And the day trend here is, it has broken this high that we formed. So it's questionable if we're moving into an uptrend here at the moment because we don't have a higher bottom. But I would certainly look at, and we're just holding at the 62 level of the decline at the moment. Would be nice in a perfect world to see price come up to 162.26. If it starts to fail at that level, then on a lower time frame, can you see a nice setup to short? Because that could be now clear resistance. All right. The moment the 4-hour chart is just holding to an uptrend here as well. Yesterday's high came in at this olive line is noting last month's low. So the candle low of the monthly candle is holding the market. So last month's low is 162 even and 6 fractional pips. So I would say 162 to 162.26. That's a clear area of possible resistance this week. So if we start seeing structure changing, we hit that and structure change on the 4-hour chart to down, then, you could be looking through the week for this to come up first of all, the hits. It's already hit the monthly level. Maybe it can't hit the higher level. If this was to break a low, come back up to rally up to maybe form a lower top, that's going to be suggestive of the next movement down this way, okay? It's not a great area to be a buyer when we're trading into last month's low and resistance at the moment. You need to see price get above that area if you want to be a buyer. Or allow price to move down and then look for setup to buy if you start to see it. All right, so I would be predominantly watching that area at the moment for shorts. Now, last week on the Euro Pound, I said, were we going to form some form of left shoulder? I draw it in on the weekly chart here, head, right shoulder. I was on the phone with Nathan yesterday, and he said, I got short the Euro Pound. I said, what are you watching my webinar? So he's gotten short up here from last week. All right, so can't go back to 86.02 now to short it. However, what we might see through the week is a revisit to the 79% level of the range, 85, 88 up to 86.02. And as well, you could be on the 4-hour chart of this whole move down at the moment. Keep dragging the fib down if price keeps moving down, and then look to the 79% level. At the moment, that overlaps pretty much or very close to the 86.02 level up here. So I would watch for, do we get a rally? Got lots of pound news coming out this week. So if that becomes rather negative news for the pound, the Euro Pound will move up. So that might drive price up here to offer you the opportunity to sell at that 79% level. For then the continued move down. That's what I'll be watching for if I wanted to trade that pair. This is a prime example of getting your focus from the higher time frame charts. Go to the day chart. You can see why when we turned around up here where we were failing at this high, went through, fell back below. Then we had about 5 candles here rejecting that high. And where do we stop at the next revisit? The same level. All right. This is where all the selling started to move down. This is where all the selling is restarting to move down. It happens all the time. So it was a very logical area to watch. All right, pound dollar. Now, this is my 4-hour chart at the moment. I got the fib drawn across last week's range. We're right up, back up to the top of the range. We're actually at another fib level. So we're almost at the top of the range, but there is another fib level to look at. If you go to the day chart at the moment, this is still in a downtrend here. Last time we had a day up was this candle here. So if you draw a fib from that day up to the final low, we're at the 62% point, sitting at daily resistance here at 28.06, a little bit above, you've got 28.17 from this high. Now, in today's volatility, we could simply already bet the level that we're going to hold at, and if the news is good for the US dollar, this would just move down from that level. But levels worth watching if we spike up a bit. Up here at 28.60, that's that significant high here. That will be well worth an area to watch. Or then the next one, 128.93. Or depending on what price does, 129.95, which is from the weekly chart. All right. In fact, I'm not sure it is from the weekly chart. I just need to recheck. That actually might be from the 4-hour chart. That high. So from the weekly chart, I'm pretty sure it's this level over here. It's 130 exactly. 130 exactly from over here. Then I'll just refine it on the 4-hour chart to 129.95. So around about the 130 level. So if we get a rush up on the news, then I would watch those levels on the upside to see what happens. On the downside, if you get an immediate rush down, last week we got support down here at 127.02. So that's only 100 pips. So we could do 100 pips in 15 minutes after the news today. So if we were to rush down and then start to hold, that would be the support level to watch. Okay. So right now, we could definitely run 100 pips and we're almost at 128. So we could easily get up to 128.93 today, this high and then hold. Where would that be in terms of this whole range? 62 level there at 128.99. All right. So I'm thinking that this may be a very significant top. So that's why I'm suggesting we might be just getting a volatility rally for some form of major lower top to form to this top to continue the move down. I'll have to wait and see. All right. But at the moment, if you drop to the 4-hour chart, we're holding within the range of last week. Now, the news event tonight, if it comes out on prints, we may not see too much volatility at all. We may just see price coming up to last week's high, 28.17. We tried to get up there on the last 4-hour candle and then, of course, got held. And this could just be, prices getting driven up. Retail traders are buying it. Institutional traders want to sell it at a higher price. This is where we were failing last week. Like I just showed you on the euro pound, this is where all the heavy selling started last week to move down to put in the low before we came back up. So this could be where the selling starts this week in the same area to come back down to the lower last week. Right, so on the 15-minute chart, if you wanted to get in, start to look to get in, I know we've got the news coming out. We're probably having a 62% retracement here. It'd be nice if it came back up to 128.06 and the 79% level if you wanted to trade here ahead of the news. So we get a fail, some form of a intraday head and shoulder affair. All right. Pound yen. All right, so same look as the euro yen. Spikes through the 79% level on the monthly chart. Bouncing off monthly high area here. Weekly chart. Struck between weekly support, 186.75 to weekly resistance here at 189.98. So both the euro and pound yen are coming up to a weekly resistance area just underneath. We're going to see the market top out in that area. This hasn't come up as strongly, I don't think, as the euro yen has. It hasn't moved above a top that it's formed or any significance, though this is still in a downtrend, lower top, lower bottom. So this starts to turn over on a 4-hour chart in the area that we're at, the 62 level of the big range, 189.98, the weekly resistance. That could be the level we start to watch for the market to maybe change its 4-hour structure. So if we are going to turn over, we really probably need to watch for 4-hour structure to turn down, break the low, come up and rally to put in a lower top, ideally a 79% retracement, and then start looking for the opportunity to get short. Are we going to see a move down? Now, we could obviously break higher, but we're just starting to test some areas where the market could most definitely want to falter. Okay, Aussie yen. So monthly chart. Didn't quite get as deep. Rallied back to monthly resistance here at 97.66. We're trading at 97.61. We just got above it yesterday just before selling back below. So weekly trends down. We've had 5 weeks down to last week's low, having a week up. coming into a weekly low here at 97.76, holding at monthly resistance 97.66. Okay, daily did reject there yesterday. We're testing it once more again, that monthly level today. Forex structure is holding, but again, we've also got last month's low here. So we're fractionally above last month's low and last week's high, underneath monthly resistance. You can see there, when we did the decline down to the low here, we broke this little area for our support. See how we went sideways and then broke? So we could most definitely here break support, look for the rally, retest monthly, last month's low, about 97.30, 79% retracement maybe. If we start to see that start to form, expect to move back down. And of course, on only all these end pairs we could break higher, but just at the moment we're at an area where we could see a movement back the other way. Maybe the market this week could just have a week up, nothing more, and then turn down. All right, Aussie, it's doing the same sort of thing. We're having a week up just. It's barely holding above 66 at the moment, 6600. So on the weekly chart, we came down to weekly support. And whilst that weekly chart candle looks very bullish, most of the drop we had last week happened on two 15-minute candles. So if that drop didn't occur because of the volatility that was going on, then maybe we were going to have a week up last week and then into this week in any event. So maybe we were going to put in some form of kind of, we've broken this weekly bottom here, right? And without the volatility last week, we may have just come down to here and then come up and then maybe, you know, doing this sort of affair. Of course, the volatility pushes down. So now we put the fib down to the bottom and we're coming up. We're just a little bit above this weekly level at the moment, 65.75. Like we're on 27 pips above there, so we can easily be back below there by the end of the day. And on the day, let's move to daily. There's resistance up here at 6619, 62% fib, 6626. That would be a very logical level to see this movement up at the moment finish. So that would be a level I would watch today to see if we get into there and move back out of. We get a very high move, 79% level, 6701, 6704 is this area of resistance through here. Because if we get a very large volatile movement from the news, it'll just move. You won't be able to get in and trade that move. Then you're asking yourself, well, where would be the next stop for the pair? Where potentially could we see a lower top forming? You know, for me, it would be very obvious for this to be maybe a left shoulder. And a right shoulder form here. Of course, price has to get up there for that to occur, and it may not get there. It may only come to here before it wants to go that way. But it is worth stating though, we could see price come down to 65.75 today and hold, and then move up this way. All right, so a few levels to watch depending on what your philosophy is. If you're more bullish this pair, you want to see price have a nice little dip to a level where you'd expect support to come in, and that could be 65.75. All right. I'm still predominantly bearish the Aussie, looking for some form of topping out process to occur somewhere. For then another move down to test 63, 62 to continue the downward movement. Until proven different, this could be the high of the year. So the market could still be searching to put in the low of the year. Okay. Or on the flip side, this could be the lower year. And the market's now going to come up to search, put in the high of the year. But because we have traded below there, then I'm thinking that this is a rally at the moment in some form. Like I've been saying on the other pairs, you don't have to guess. You can, if we are going to put in some kind of top, you can wait for the 4-hour chart to change trend. As you see it changing trend, then look for an opportunity to get short. Right, New Zealand yen, monthly chart here. Forex brought the 79% level. High top, this is the high bottom. On the weekly chart, trend is down. We're coming back up to the broken swing low. So that's 89.94. That will be my primary level of resistance to watch at the moment to see if we hold to continue that decline that we've been having. All right. So we're 60 pips away from there at the moment. Of course, we've got the interest rate decision tomorrow. So any volatility from that could get it up to 89.94, up to the 90 level. All right. And then what happens here? On the buy side, 88.16 here. That's this monthly area here. That could offer support if price moves down to that level as well. So, to the weekly chart, those are the two primary levels to watch for resistance and support. 88.16 support, 89.94 resistance. So around the news items at the moment over the next 24 hours, I will just be watching those levels. If we come up, if we start to hold, look to your 50-minute chart maybe to get a tight entry. New Zealand dollar. All right. It's coming into very similar to what I was discussing on the Aussie dollar. We've actually come down to weekly support here. This is a weekly low to a slightly lower bottom here on the weekly chart. So there's a range here on the weekly chart. I can show you on the weekly chart. Lower top to a lower bottom, but it's kind of equal lows here. Are we just rallying back up for the next lower top? We're at the 62 level, fractionally short of resistance. Are we going to come down to do that sort of affair? So what we've done is we've got this double top here, right? Then we've come down, put in a lower top, lower bottom, and we're going to go lower top to a further lower bottom in line with this double top. All right, so fractionally short of 60.47, that would be my primary level to watch for resistance. Okay, so do we start to fail in that area over the next 24 hours? Do you start to see a turnover? Can you start to see your opportunity to get short? We could go higher up to the 79% area too, because there's resistance at 60.98, all this support through here. And the 79% level at 60.87. I'm still bearish this pair structurally until we break this high from the weekly chart. Okay. Dollar Canadian. Now, we had a very negative weekly candle because we got driven up above all these highs and then we had the drama last week. So whilst that looks very negative, we've been holding for 3 or 4 days at 62% retracement of this range. This isn't an uptrend, that is double bottoms to a higher top. You can see we've been holding at the 62 level. All right, it's rather sideways here, consolidating. We've got a higher bottom. That is a lower top to that top. But there are a few minor swings in here, so there's I kind of map out where we came down to there, then we came up. So depending on how you want to draw it in, it's a little bit more like that maybe. With a slight upward kind of nature to it. And you can see we once more got almost to 62 and held. We could be seeing a little bit of a head. Inverted head and shoulder maybe. So if we do see, we could even today still come down and revisit last week's low. We couldn't quite get there yesterday. Last week's low is 137.17. So we could definitely come down and revisit that level false break. You know, if we did move down and came back above the 62 level today, that's starting to set a strong case that maybe we're putting some kind of base here at the 62 level to get ready for the next move up. All right. So I'm definitely watching that for that kind of thing. We could come down to the 79% level. That's at 136.64 before, again, getting ready for the next move up. Let's not forget where the major trend is. The major trend is actually up, even though we had a negative week last week. Okay, just moved to the 15. The range of yesterday. It's at about a 62% retracement today. Sorry, 60% from my weekly chart fib. It's almost had a 79% retracement. So today's volatility might be light. We may only get down to this area here, 62.11, 79% level, 137.24 area, down to maybe 137.20. All right. Dollar franc. This is the area on the day chart that I highlighted last week. It's where we rejected yesterday, 62 level. So this day chart downtrend, the weekly trend's down as well. This low over here, which is a weekly broken low. Whilst we rejected that yesterday, we could certainly come back up into this area today and then fell once more. So that would be the area to watch. Do we come up today on the news? Do we hit 87.29 or close to? 87.05 is 62 level. False break yesterday's high and start to turn over then through the week. Okay, trend is down. That's a very logical area to see a failure if it moved back in there. All right, dollar yen. Monthly looks just like the euro yen I was discussing before. This is going to be a higher bottom. False breaking the 79 level. It is way under the 22, 23 highs where we moved above. Weekly trend has turned down. At the moment, yesterday, we did get support on this weekly low here that we false broke. So I would maybe say we could maybe be coming up to this weekly high here, 150.87, 22, 23 highs here, 151.94. The daily, it's well worth watching 146.47, this weekly low. We could retest that again. Look, Friday we got support there. Intraday we moved down, got support. Yesterday we moved down, got support. We could revisit that level today and get support once more to keep the upward move going. We would obviously have to see US dollar strength come in the market for this to move up. But it's looking like a strong level of support there at 146.47 at the moment. 4-hour trends up. Of course, like I've been saying on the other yen pairs, if the 4-hour structure changes to down, and you're seeing that, if you're seeing the 4-hour structure change all the yen pairs, there's no way you want to look to the dollar yen to move up. And as well, on my 4-hour chart, I've got last month's low here at 149.60. So if we do continue up, yes, these resistance levels could be the levels to watch, but last month's low could be the level to watch as well. We just come back to last month's low, and then, we don't want to be back in the range of last month at all. And we want to continue down for the month. So it is a cautious side to be on, the buy side on the yen pairs at the moment, right? But we are, very much on the low side of the range. All right, let's just finish with gold, which is just underneath the all-time highs. Did get support where I said last week. Can't go back there anymore though. Price has moved up. On the daily chart, we got support at the 79% level coming up. So if we can take out this high, I don't think have we quite traded there? We're a couple of, I don't know, dollars short of there. Now, if we can't move through, one has to maybe suspect that we're going to move back down the range. It's going to be difficult though, trying to get short when the news is coming out, because it could just blow straight through here. So you just have to be on the sidelines, but it is worth maybe understanding that we're at the top. Do you want to buy at the all-time highs? Or that's the all-time high, that's the second all-time high. It's a very dangerous area to be a buyer. I don't really think maybe this is in a clear uptrend long-term at the moment. So do I really want to be shorting it? Maybe not, but I don't want to be buying up so high. I would want to wait for a dip. So I'd have to just wait to see what the chart does. Now, of course, you could go, well, if it fails up here one more time, I want to short it. All right. That's fine if you can see your setup. But, this is, hopefully you can see here, once you put this high in, it's been rather range bound, but it has been putting in higher tops and bottoms, getting very range bound at the heights, but we could still move through. Or we might, in this area here, we could just maybe be range bound, and we might start putting some maybe higher bottoms until we break. But does that mean you really want to be on the short side up here? Because at any point it could break. So I really think you want to look for a dip in any event. So you could be monitoring this range now. Back into the 23.88 level here at the 79% level. You're looking for a dip, or you're looking to these lows for support. And then if you see support come in, we're buying at support for another run up at those highs. That's the way I would look at trading gold. Okay. All right, everybody, I'm going to wrap it up there because the webinar has gone longer in its duration than normally would. Of course, we started later, but I don't want to keep too much of your day. So, of course, if you're coming in late, we have the US PPI data today, CPI data tomorrow. Usually CPI comes out before PPI, but just the way they're obviously doing it. But both of these data points are inflation points that the Fed's watching for data for, when are we going to cut those interest rates? So it's going to be very volatile at 10:30 today and tomorrow. Be aware of that. Have the levels that you're interested in, the pairs that you're watching, and just wait and see how price sits after the release and then go from there, okay? All right, so if you want to join me tomorrow, I'm going to be going through part 1 of Smart Money Concepts at 7 p.m. tomorrow. Just come over to the webinar page. There's a link if you want to join me, register your interest, and I will see you there. All right, everybody, happy trading after the CPI data today, or the PPI data today, and look forward to seeing you next time. Thanks, everybody. Thanks, MD.